Hi everyone, hope you're doing well. Today I'm going to talk about a stock that I have completely sold out of. I did this on Monday and I'll go through the reasons why I sold it, but I did lock in a very nice profit when I did sell this stock. And what has been a fantastic year for me in the markets only continues to get better as we get even later in the year. Now, I was actually going to do this video on Friday, but I looked at the market today and I was like, there's not really any news out there to really talk about. So I thought, you know what? I'll talk about this new stock today, and then on Friday, I've actually been actively buying two new UK stocks this month, and I'll talk about one of the new UK stocks I've been buying probably on Friday, and then the other new UK stock I've been buying, I'll probably talk about that one on the Friday after as well. So without wasting on any more time, let's get stuck on today's video. Now, if you do want to know what I'm buying and selling in real time, so on Monday, you guys would have known I sold this if you're on the Patreon and the Discord, and as well as that, you already know the two new UK stocks I'm buying, and there's also videos on them already on there as well. If you do want the live buy and sell alerts, join Patreon, £5 a month, links in the description. You get the Discord with it as well, and also you get a community of 500 JKI investors to talk about stocks, including me, every day on there. It is going up next year in January 2025, so this is your last chance to go get it at £5 a month, the price of a pint. You haven't got long to join that, guys. So this year, what a year it's been. Last year was a pretty good year. Obviously last year we just closed around about 40% year to date. I did a video saying I got 39%, but I think there was one trading day left, and it actually did push me up to the 40% return last year, which was really good. This year we look like we're closing in on around about 40% ish year-to-date returns once again. So back-to-back 40% year-to-date returns is going to be absolutely amazing, and what a year it's been. I didn't think it would get any better towards the end of the year, but it does continue to get better as stocks continue to rally, and a lot of my stocks continue to rally as well. And the stock that I did sell, which was my whole position, I sold it all for around about a 60% gain on Monday, was this one, Watches of Switzerland. So this was actually more of a relatively newer position into the portfolio. I only bought this one around 7 months ago, and I bought this as a turnaround play. So a stock that has just been absolutely battered, profit warning after profit warning, and I thought, you know what, there's a good business under here. This has gone way too low. They'll do some stability, and I think the stock will start turning around. Now, the big thing is that it's turned around. It's even turned around a lot faster than what I thought it would. And I weighed up the upside and some of the risk with it, and I thought, you know what, I'm going to take my profit here. But I'll show you that in a little bit more detail, so you can kind of see like the warnings, well, not the warning signs, but the things that I kind of weigh up when I look to sell a position, because without doubt, selling a position is one of the hardest things to do in the stock market. Even right now that I sold this stock, there is part of me thinking, have I gone a little bit too early? And I'll also talk about that a little bit more in the video. Now, obviously, we don't have a crystal ball. We don't know where the share price is going to go in the future. I had to weigh up what is the chance of more upside here, and what is the potential I can go use this money now into other stocks. And that's what I've done. Basically, now that I've made 60% on Watches of Switzerland, I have sold it all. And in fact, I've actually reinvested that into two other new UK stocks that I talked about at the start of the video. But what still amazes me is that even after, you know, the year that we had in the stock market last year, now another year, I've beaten the stock market every year that I've done the YouTube channel over the last 7 or 8 years. There's only 1 year I haven't beaten the market, and yet what makes me laugh is that there's still some silly comments in the comment section. Even when I talk about this stock, like it's amazing. Like every kind of new stock that I talk about, there's always the negativity. But I remember buying this stock and there was no one really positive on this stock. I remember doing the comment section, and you know, a classic Andy P comment saying that are watches Switzerland really going to make an impression in the US, and you know, by selling someone else's watches. And you know, it was such a basic comment, that not realizing that, you know, Rolex, their biggest partner, doesn't even sell watches directly to the consumer. So you know, they're not really missing out on anything. And also the US, and not looking at the growth of the US, is you know, absolutely basic investing. Also, you know, the criticism of not being able to, you can't invest in turnaround plays. And once again, you know, another absolute shocker from Andy P. But I've got to point out, investing with Dan, I'll give you a shout out because you did comment on the last time I did talk about this stock. A YouTuber that is on the upcoming scene actually did a video on Watches of Switzerland as well, and a good video. So hopefully, you know, kind of point you in a direction there. But Watches of Switzerland, obviously, since I bought the stock, really since the profit warnings, the stock is up quite a lot. I personally sold out for about a 60% gain. Now, the reasons why I did sell was basically a bit of nerves coming in about, you know, can they hit the numbers? So the first thing that kind of came in is that the EPS the profit was down 23%, but the adjusted EPS was down from 21 to 18. And if you look at the other EPS metric as well, from 19 down to 12. So the EPS is behind so far in H1. Now, I looked at the full year guide for this year for Watches Switzerland, and if they do the full year guide, that'll be absolutely amazing. In fact, it probably will be a bigger mistake for me for selling the stock. I'll let you know that right now. But they're expected to go from an EPS of last year of 33 up to 40. So that's a pretty decent increase on the EPS guide, over 20% increase on the EPS. Now, the problem is that, okay, so they've got to increase the EPS by 20%, which will put it down at 13 times earnings, which actually isn't that bad. But if you look at this here, they've got to do a big increase on the EPS. Now, the problem is that they're already behind on their EPS numbers. So in H2, they've got to do a massive increase. You know, it is the strongest part of the year. Let's not rule that out. But the fact that they're already behind quite a bit, and last year was already a weak year, and then they ended up doing the profit warning, and this year they've got to do even better numbers, and that's where it fell off massively in Q2 last year. I just don't know. I think that's a really big ask for them to get that EPS numbers. So that was the first sign that I looked at and I thought, I don't know if they can hit this EPS target for this year when they're already behind in H1. That's a very big ask for H2. So that was the other thing that kind of made me a little bit nervous of, you know, can they kind of hit those kind of numbers. The next thing is when I look at the index for the Rolex prices. So as you can see here, this is an index for the Rolex market at the moment. And let me just zoom out a little bit more. Can I go to the 2-year one? So if you look at the 2-year chart, you can see here what happened in 2023 is prices just went down, and down even more. So that was a big impact on them in last year, and that's why they had a bit of profit warning. They had to sell watches at lower prices. They had stock that's obviously a lot lower price as well, and that hurt them massively, and that's why they did a profit warning last year. So because of this big headwind that they had, basically they didn't hit the numbers. Now, if the Rolex prices basically stayed stagnant, I'd be a lot more confident on them hitting this year's numbers. And if you look at H1, it was pretty stagnant, even in that period they had a big decline on their EPS numbers. But what makes me a little bit more nervous is when you look at the Rolex prices, all that's happened is they continue to go down and down and down and down. They had a little bit of a bounce up in October, and then it's just fallen even lower through October, November and into December. And especially if you look at November and December, the fall off has been pretty substantial in the last 2 months as well. So that makes me a little bit more nervous as well, that we haven't only just seen prices continue to drop, they've even dropped even bigger in the H2 kind of period, which I'm like, that's another. So you've already got the EPS numbers that I thought were tricky to have. The fact that Rolex prices are also going down is another thing that's kind of making me a little bit nervous once again. Now, the third thing is that we're kind of having deja vu. So last year what happened is they were in the exact same spot where they did the H1 results, and that was on the 7th of December, basically where we're at right now. In that time period, they came in and said, we are in line with our results. By the time we got to the 18th of January, only 5 weeks later, we had then a big amount of profit warning come out from Watches Switzerland. And they basically downgraded the guidance pretty massively. So it went from constant currency revenue of 8 to 11% down to 2 to 3%. And it just even margin went from in line to 8.7 to an 8.9% as well. So there was quite a big downgrade on the guidance, on the revenue and the profitability point of view. So the fact that we saw them last year in the exact same spot, and they did exactly the same, where they said that they were in line in December, and then 5 weeks later in January, then they came out with the profit warning. It just seems like we've kind of seen the same thing happen once again with them. The other thing, maybe a smaller thing I guess as well, is that potentially that I could say is that the balance sheet has got a little bit worse since I started buying a little bit earlier. The debt has gone up a little bit more, I could say, but that's not really a major issue at all. I guess the other thing is the valuation has changed a lot. And then when I look at the numbers are not showing much upside. So I've put 4, 5, 6% revenue growth in. These are the numbers that I used when I bought it, and I've updated the market cap from last time. 15 times earnings, there's not really much upside, low side 15%, mid side 10%, upside 37%. If they do hit the really high numbers, you could argue the case that there's a bit more upside, but there's not that much. The big thing is that if the stock did go back up to like 20 times earnings, then the stock would actually still have plenty of upside. So I'm unsure if the market's going to value it a little bit higher. That's where I'll probably have this one wrong if they do put it up a lot higher. But for now, if I stick at these numbers, there's still some upside. The other thing that I have is that obviously I'm using profit margins of 4, 5, 6%. If we do have a quick look at the previous profit margins of Watches of Switzerland, they don't really have a history of significant profit margins. If you look before the coronavirus times, it's always been around 1%. Now, you could argue the case that we're reinvesting into the business a lot with the US growth, and that has given them a big boom on the revenue, as you can see here. But at the same time, there's not really the profit numbers to run off. Now, in the CV times, they did get to an 8% profit margin, so potentially they could get somewhere now around there. But now they're down to about a 2% profit margin. So even on my numbers right now that I was showing you, this does have a significant increase in the profit margin also factored in as well, and we are yet to see if that kind of happens. So that's another thing that also kind of pushed me over to kind of sell. Now, like I said, these positives, because like I said, if the market then decides, you know what, let's throw this at a higher multiple, that could potentially help them. If profit margins, if they expand, that could really help them. If revenue goes higher than 6%, that could help them. And you've got to remember, we're also still in a weak environment. You know, Rolex prices eventually, in my opinion, will come back. If you do look at the longer term trend, historically Rolex prices do go up over the long period of time. And also you look at Watches Switzerland growth at the moment, the luxury watch market for them guys was only down 2 or 3%. If you go look at everyone out there in the kind of luxury space, you know, if you go to LVMH and you can see here sales slipped by 11.5%, they're still outgrowing like a lot of these companies in weak times. So if you imagine everyone's kind of struggling in this luxury space. So if we do see a rebound in the luxury space, Watches Switzerland I think will do quite well from that. And I think they could easily, outperform the broader market. So the other thing is that you've also got the luxury market to kind of come back here. So I could easily be wrong on selling this one because, like I said, we could see the luxury market come back. We could see revenue growth faster than what I thought. We could have profit margin bigger than what I thought. And the market might throw this at a bit more of a premium than what I have down there. I could easily be wrong on this stock. I'm very 50-50, but that's also why I kind of looked and sold at the stock, because I thought, well, if I'm 50-50, do I want to sit on this 60% profit, or shall I take it and go invest in something else where I'm a lot more certain? And that's what it kind of came down to, is that if I'm 50-50 on a stock, that's not enough for me to kind of hold it. If I do have those concerns about the EPS and if they can hit the target, if I look at the Rolex prices, in the short term, I'm just seeing, I think in the long term, it could be very much okay. But in the short term, if this comes out with a profit warning in January, I think very easily Watches Switzerland Group will fall 30 to 40%. And I think that we'll talk about Watches Switzerland Group very much back in the kind of £3.50 range, somewhere down, about here, back at where I nearly bought it to be, £3.50, £4. I think if they have a profit warning in January, that's where they falter. So I was thinking, do I protect my capital, or do I just hold because I think there might be a bit more upside? And I thought, it's time to take the profit. And especially because I had two stocks that were staring at me like other opportunities. The other opportunities that I was seeing out there when I were doing these numbers were giving me a lot more upside. So when it comes to a risk to reward point of view, I was thinking, okay, there's a bit more risk with Watches Switzerland to the reward. I've got to move away from it. I look at the other stocks that I'm looking at potentially allocating this cash to, and that I did buy. I look at them, and when I look at the risk to reward, there's more reward to the risk side, so it's worth buying them instead. So yeah, I did sell it. This is a big thing with selling. You don't know if you're selling at the right point. That's a really tricky thing. But I just, because if Watches Switzerland coming in line with what they're expected this year, if this stock comes in with their full year guidance and they do hit their EPS numbers and they go down to a P ratio of 13, 2026, if they hit 2026 numbers, there's definitely going to be more upside here. But the thing is, I just don't know. And I'm more nervous that they're not going to get there. So it comes down to protecting the cash. Stocks aren't loyal to you. As soon as this has if this does have a profit warning, you'll feel it big time. So for me, you never go broke taking profit. So I felt like this was the right decision, and hopefully it's right. Although if you're still investing in it, I hope you do make money as well. So we'll see what happens anyway. So I hope you enjoyed the video, guys, and congratulations to any of you guys that were buying Watches Switzerland Group, because I'm sure you've been making plenty of money on it like me as well. Thanks for watching, guys. See you in a bit.